Good afternoon. My name is Shyam Prasad. I am Secretary in Bangalore Chamber of Industry and Commerce. I welcome all of you for today's webinar on turning tax reforms into opportunity, the hospitality perspective. So today's speakers are Mr. Santhosh Dalvi, partner KPMG in India, and Mr. Sandip Jain, chartered accountant. I welcome all the participants and we look forward very interactive and interesting webinar. I request Mr. Manoj, Mathew, Chairman, Hospitality, Tourism and Travel Expert Committee of BCIC, to welcome the participants and also introduce the speaker. Thank you, sir.
Thank you, Mr. Sharma. I think this is one of our first initiatives as a Tourism Expert Committee, and I would like to quickly introduce both the eminent speakers who will be interacting with us and will be sharing their perspective. I'll start with Mr. Santhosh Dalvi, who's the partner for KPMG India, and Mr. Dalvi has more than 35 years hands-on experience in the areas of indirect taxes, finance, and commercial functions. He has worked in local corporate as well as MNCs in the FMCG and engineering sectors for over 13 years. Santhosh leads the tax managed services in KPMG in India. He is also a tax lead for the life science sector in KPMG in India. As a tax consultant, he has been advising various local corporate as well as multinational clients across various sectors on indirect tax implications, tax planning, business restructuring, and compliance aspect concerning the setting up of business operations in India. Welcome, Mr. Santhosh Dalvi. We are honored and delighted to have you as one of our speakers. Mr. Sandip Jain is a chartered accountant by profession and has over 18 years of experience in the field of indirect tax consultancy. He has been assisting a variety of clients on indirect tax advisory and compliance related matters, including structuring of business processes in areas of goods and services tax, GST, customs, foreign trade policy, and free trade agreements, including erstwhile indirect tax laws covering service tax, value-added tax, central excise, etc. He has been closely involved in the work with major clients and has assisted in all indirect tax-related matters, including GST implementation and post-implementation support for IT and ITES, automotive clients, FMCGs, apparel, aerospace, e-commerce, gaming, etc. I would now hand over the podium to them, and we will take questions soon after the what the speakers have to say. Meanwhile, it is recommended that you write your questions in the chat so that we can compile it, and end of this session we can then look at it. I also want to take my I'm really honored that all of you all took your time to come and join us, and we hope it is fruitful and impactful for you. All the best. Thank you.
Thank you, Mr. Mathew. So I'll request Santhosh to start with, and then I'll take over from him.
Thank you, Mr. Mathew. Thank you, Sandip, and thank you, the Bombay Chamber of Commerce and Industry. Am I audible for
Yes.
organizing this wonderful event? I think it's really a wonderful initiative to make the members aware of the recent changes and the implications. So it's indeed our great privilege, for myself and my colleague Sandip to be here, and presenting the impact. Of course, please, sorry for my bad voice because I'm, suffering from viral infection and I have a bad throat and cough. Of course, I will not be doing much of the talking. The detailed impact will be discussed by, Sandip, while I would just, briefly introduce, the content and, what is likely to follow. Okay. And again, thank you very much and good afternoon to everyone for joining this, So again, it is famously called as GST2. Okay. And on the historic day of 15th, August 2025, our Prime Minister actually made the big announcement, okay, as a part of his independence speech, that he would like to see, the big dhamaka of, literally those words, GST reforms by Diwali. And of course, everyone was, wondering. There was big euphoria. At the same time, some, skepticism also followed. Whether is it really possible for within timelines to really implement this, the huge change as, or ambitious change as announced by Prime Minister. But then, of course, in the 15 days to follow, there was supposed to be the group of ministers, GST council debating on this, and on 3rd and 4th September, the detailed discussion of the GST council happened. The meeting was supposed to be lasting for 2 days, but in the first day itself it got concluded, and all the changes, all the suggestions, amendments were unanimously accepted by the GST council. I think that was the beginning, I would say, for this entire GST reform 2.0 to become successful. Now, of course, it's basically the holistic exercise which government wants to do or has already done, I would say. In fact, what we are talking about is a history which is almost more than 15 days old, you know. So then, but that shows the genuine attempt to reform GST, to its core. And I would say this is the single biggest, structural reform ever since GST was introduced in 2007. Okay. So what actually has happened? As you know, since the implementation for last 8 years, we have seen there was four-tier rate system, you know, which has brought down to very simple, you can say largely two-rate structure. So earlier there were 12%, 28%. These two rate slabs have been abolished, okay? Whereas earlier 5% and 18% slabs have been, retained. So 5%, as you know, is basically a merit rate. So now most of the common household items would fall under, like medicines, food items, etc., would fall under 5%, whereas standard rate of 18%, will apply to everything else. And then what we have is 40%, which is demerit rate, will, apply to, they call it as thin goods or, select, luxury goods. And earlier there was, compensation cess, okay, which was applicable on certain products. Now that has also been abolished. The most impacted sector is, automobile. Earlier, automobiles were, charged with 28% plus, compensation cess. And the rate used to cross, almost more than 40 to 55%. But now you can say the with the abolition of the cess, the automobiles have fallen under 40%. So, from 28 to 40%. So, which means now most of the items will fall under 5% and 18% and only few in 40%. And of course, this has, negative impact for the government of around 48,000 crores annually. But then government hopes that, of course, they will be able to recoup that because they expect, economy to boom, GDP to be, benefited basically because of this move. And, as we read in papers, in few corners, we see a big actually noise that, it has actually helped, grow business in some quarters. Okay. Then, of course, it was not just about tinkering with tax rate. Of course, it goes beyond that. There are certain, ambiguities, certain things will reduce legal disputes, okay, which actually basically arising out of classification of goods, okay. Now, and that is what is the universal principle. Keep the classification or rates to minimum, slabs, and you actually can avoid the classification disputes. Okay. Then, of course, other thing was to make household essentials more affordable. Okay. And again, as you say, most of the 12% or 18% products have gone to 5%, like pharma product, food product, medical equipments, all those, are becoming basically affordable for the common people. The next thing also was of ease of doing business, and there was certain category of service called intermediary service. And of course, that was actually leading to the cost impact, especially when it was provided from India to overseas, recipient of service. Since the service provider being intermediary, residing in India, it was taxable in India, and the recipient was not able to claim the offset of that, especially within group entities. This used to lead to additional cost effect. So, now the amendment has been proposed to bring intermediary in line with normal export of service based on recipient, which means if the recipient of service is situated outside India, that would qualify as export of service and would not be liable to GST. Another, simplification they have brought is in terms of, post-sale discount. Now, in terms of credit notes for post-sale discount, they have brought the flexibility for businesses, in their commercial dealing. They also brought, the inverted duty structure where the input tax rate is higher than the output tax. Of course, it was there, but they have also introduced the provisional refund to expedite the long pending demands. And also much awaited, GST appellate tribunal. You have seen now it has seen the light of the day, and it has actually become the, reality now. And and hopefully that should bring the a lot of pendency of litigations down, which has been accumulated over these years. So this should also facilitate, businesses in terms of, speedy mitigation of their litigations. So these are the, I would say at the summary level, thought of highlighting this GST 2.0 impact, but I don't want to steal the thunder out of Sandip's, detailed, well-studied, well-researched presentation on various aspects. So with this, I'm really happy to hand it over to Sandip for next proceedings. Of course, I'll be going on, mute. I'll be earlier. Of course, I may be traveling for some time. I may join, on the link, but any possible, I will also try to pitch in case of question and answers, wherever applicable. But, I think most of the things will be done by Sandip. I'm handing it over to the able hands of Sandip. Over to you, Sandip. Thank you very much once again for, joining this and giving us this opportunity. Thank you very much. Over to you, Sandip.
Thank you, Santhosh, for the overall contours of GST 2.0, covering various aspects of what that meant for us, covering various industries. So moving on with the specific topic for which all of you are present today is to talk about the hospitality sectors. I'll start with the rate changes and then cover in terms of where we see there are opportunities and aspect which one needs to take care as part of business. To begin with, on the outward side of the GST, there are a host of services provided by the sector. We have illustrated few of them in this slide, which you can see. There are changes significant enough which will require detailed deep dive of the business. To begin with, the basics of room rentals, which previously was subject to GST at 12 and 18%, depending on the tariff of 7,500. The good thing was that input GST credit was allowed throughout. Now there is a change for the room tariff limited to 7,500. While the rate has come down from a 12% to a 5%, which is a welcome move by the government, it comes with a rider that input GST credit for such room rentals will not be allowed post 22nd of September. So that's one. The second change is on some of the services in the nature of spa, salons, gyms, etc., which now again has moved from a 18% with credit mechanism to a 5% without input GST credit. So that's the second part. The third, and I'm going to serial number 9, 10 and 11. The rest of them, there are no changes. It's there on the screen for us to consume. The cab services provided, again, there were two types of rates previously, 5% without input GST credit and at 12% with the GST credit. So as Santhosh highlighted, 12% no longer holds good. So the 12% goes up to 18%. The credit mechanism remains same. The 10th point is more on the admission to casino. The rate has gone up to 40% category. Government believes all these are sin category or a luxury category. And the 11th point is on the aerated or carbonated beverages, which was subject to a 40% GST, broken down into 28% of GST and 12% cess. Now there is a flat rate of 40% on that. So primarily we will see these changes will call for significant business process change, changes in the ERP, and of course the compliance in terms of how do you take care of some of these rate changes. Moving on the inward side, again there are welcome changes on account of rate reduction. The air conditions, dishwashers, television sets, more than 32 inches previously were taxed at 28%, now it got reduced to 18%. And likewise, the food items, toiletries, I mean, all these rates have gone down from a 12% or an 18% to a 5%. Something like a cement, which is which has gone down from 28 to 18%. Right, and of course, motor vehicles rate could go up or down depending on what category we are talking about. So overall, if we see the business cycle where we have invoices to be raised to customers and we have purchases done where we pay GST on the procurement side, the rates reduction is one part. GST credit disallowance is the other part. And third is some of the sin categories or cess which has been tinkered with needs to be looked into. I'll move on to the next slide, which is to give a sense of the hotel room rentals. More than 7,500 is subject to GST, full credit, no problem. Less than 7,500, 5% GST, you can't claim credit. And therefore, now there is a need post 22nd September for the businesses to have a clear identification, attributing credits, which is towards 18% of the room rentals, therefore eligible for full credit. That's part one. Credits which are attributable to a room rental less than 7,500 unfortunately cannot be claimed going forward. That's a cost for the business. And then there is a third element where there could be a lot of common expenses, maintenance, amenities, there could be some management charges, auditors expenses of rentals of the premises, so on and so forth. Now, all those common expenses will henceforth require to comply with what we typically call it technically a Rule 4243 reversal. In short, the common credit cannot be claimed the way we have been claiming in the past. It requires an attribution either towards a taxable supply and therefore entitled in completion, or towards a restricted supply and therefore it becomes a cost of doing business. And if it is common, then we allocate in a proportionate basis to claim part of the credit and restrict a part of the whole credit. Right. So this is something which is going to be something very relevant for everyone, and therefore it is important for us to comply with. Now, getting into a little more deeper discussion, what are the aspect which one needs to definitely look into, and first one of course is the classification of service which is relevant. I mean, how do we look into things which is on the classification part? Why this is relevant? Because the rates now are varied between 5 and 18. Whether we get into a standalone hotel which is only providing room rentals or room rentals with a restaurant service, the rate changes coupled with the 7,500 tariff implication. Whether we get into a tariff for only bed or bed plus breakfast, how do we classify the service is again relevant. The third could be there could be a wellness spa packages along with room rentals or restaurant services which is bundled together, or a business package where the room rentals, Wi-Fi services, meeting rooms all are bundled together. The classification test becomes very relevant. How do we classify the services which we are getting into? Is it a individual service or a package service? And if it is a package service, whether we get into something called as a composite supply, which means if more than one service are bundled, what is predominant on that whole package becomes relevant, or is it a mixed supply where the different rates will apply? Right. So that's one. The impact on pricing, I spoke about that because of GST credit being disallowed exclusively for some of the services or commonly allowed. There is a need to look as to how the GST non-creditable expense will have a bearing on the pricing. I'll cover this maybe in a small example little later, but this becomes relevant. The transitional provision, of course, we have crossed that bridge broadly, but then there would be cases of pre-booking, cancellation, modification, payments received in advance for the room rentals after the notification date. All these, and there could be multiple combinations in this. Again, we will cover this in a table example for the participants to get a sense of what we are talking. Transaction with overseas agents and the services by overseas agent to the sector in India was not subject to GST previously. It is still not subject to GST, but as Santhosh was highlighting, the government has come with a proposal that the intermediary services are likely to be subject to GST based on the location of service recipient, which effectively means that the transaction with some of the travel agencies in going forward, once the law is amended, will be subject to GST, and a part of that may become a cost because overall there is a input GST credit which is disallowed. CapEx, again relevant. Any expansion, new projects which we get into, you might have signed contract with EPC contractors, developers. The rates have gone down, and it's the right time. We need to look into the GST rate reduction benefits and see what could be those, renegotiation strategies which one can get into. And of course, all these things come with a upgraded documentation compliance, which one needs to look into. Right. So this is more of an example which I just wanted to touch base. As Santhosh was highlighting, the rate has been reduced. Expectation of the government is wherever there is a rate reduction, the benefit is passed on to the consumer. Now a 12% category, hotel room rentals, going down to a 5%, as a consumer, they will definitely expect the benefit to be passed on to them to the extent of 7%. But the reality may be different. This is one example which I will talk about. Of course, this each company will need to look into their fact pattern, the real data, and see where do they stand. But just to give a sense of what we are talking about in the existing or pre-22nd September regime, if the room rental were taxable at 100 rupees, as example, broken down into cost of raw material as 30, cost of services as 25, other employee cost and other non-GSTable cost as 30, and the balance 15 as a profit. The GST paid was a pass-through, therefore it was not loaded, and the net price to the customer previously was 112. The basic expectation as a consumer should be that 112 includes 12% GST, flat 7% reduction. The new invoice should be at 105. However, with the GST cost being disallowed, the cost of raw material with GST will become a embedded cost. The cost of services, and we are talking about a scenario where the room rentals are less than 7,500. The cost of services with GST also will become a cost, which is 31.89 and 29.5 in my example. The non-GST supply cost remains same. Therefore, the cost of providing services goes up from a 85 to a 91.39. And if one has to make the same margin of 15% or 15 rupees, then the base sale price before GST should be 106.4 or 106.39. We apply a 5% GST, and the total invoice which is billed to the customer comes 111. All what I'm trying to say is that the factor of cost and the GST embedded on the ineligible supply will need to be taken care of while designing the revised price by the business, and that's become very, very important. I'll move on. Air transportation, again, there are two parts, the economy class and the business class. There is no change in the economy class. The rate remains 5% without GST credit. However, for the business class, the rate has gone up from a 12% GST with credit to a 18% GST with credit. So there is a 6% hike or increase in the GST rate on the air transportation. Similarly, on the rent-a-cab, as we spoke some time back, there were two categories: 5% without credit, 12% with credit. This definitely has now gone up from a 12 to an 18%. And especially for hotels, or the hospitality sector where they claim credit of the rent-a-cab services, charging a 12% GST to the customers. That 12% now will have to get converted to 18%. Of course, if they take credit, and that cost gets loaded to the end customers. So it's not something that everything is going to be beneficial. There are cases where it is also going to increase the overall price for the customers. Moving on, and the transition provisions, of course, relevant. Broadly, the transition rules are clear for the services. There are 3 events or 3 categories which one has to look into. The date of completion of service, date of invoice, and the date of payment. Now, out of the 3 events, one has to see which, if 2 of the 3 events concluded prior to 22nd September, their old rate will apply. And if 2 of the event took after the 22nd September, then the new rate will apply. So that's the theme in which one needs to look into whether one should charge a new rate or the amended rate of new rate of GST or the previous rate of GST. Very, very relevant, because in this whole sector, many a times bookings are done in advance. Part payment or full payment is done in advance, and therefore this becomes relevant in this whole thing. Typical scenario could be of those cases where, especially for hotels, where the check-in dates is, say, before 22nd September, and in our example we have taken 20th September as the checking dates. The checkout dates could be 25, and therefore this is one of those cases where both the old rate and the new rate applies during the whole duration of accommodation or stay in the place. Now the question obviously is, how do you decide the rate? Is it on a daily basis? And therefore for 28th, 21st, we should charge the old rate, and 22nd onward, we should charge the new rate. That's one way of looking. Or during the checkout period, the invoices are typically raised, and therefore can one adopt new rate for the whole duration of stay. Now this lacks clarity, but relevant for us to be clear of. There are 2 possible views, and we may need to watch out if there are transactions which are in this nature. Moving on, so we have, as we spoke some time back on the intermediary services, today it is not subject to GST when the agents are outside India. The moment this becomes taxable in future, and of course this requires a change in law by the government, which is likely to happen somewhere in the next parliament session or in the budget session. This 18% GST will require a portion of that to be attributed towards an exempted supply or a taxable supply, and therefore there is a likelihood of cost increase which can happen. Right, and of course, I mean, this is while we are talking about the incentive available to tourism policy. Different states have different types of tourism policies. The benefits vary from a capital incentive on a percentage of investment to stamp duty exemptions and other benefits. Some of the states also give benefits for net SGST reimbursement. And of course, wherever net SGST reimbursement goes down because of the rate change coming down, the overall incentive benefit also comes down. While we are talking about Karnataka also has a policy, it doesn't specifically has its SGST portion. But yeah, it does, I mean, help if we are talking about any new investment which are planned to be made in Karnataka or any of the other state. One needs to look into one, of course, the impact of the incentive available on the tourism policies or the state policy, and the impact on account of the reduced rate of GST which comes in. Right. So with that, I would end my presentation in terms of what I wanted to cover broadly on this sector, covering the room rentals to the airlines to the rent a cab, the individual services versus the package services, the implication on the agency which is outside India, incentives and the transition provision. All these are relevant. The changes in the ERP processes, documentation becomes very crucial. And of course, the September month return, which is due to be filed on 11th and 20th of this month, will be the litmus test for transition. It will cover 2 periods, and we have to be very, very careful. The first period will be 1st to 21st of September. The transaction happened. The laws were different, and therefore we have to be careful in terms of reporting. And the second is the 22nd till end of September. Laws have definitely changed. The implications are different, and we need to be very, very careful when these returns are filed, so that, I mean, there are no surprises which comes in during the GST scrutiny or proceedings. So with that, I will conclude my presentation. I'm happy to take questions from the participants. Yeah.
Mr. Reddy, you would like to ask a question, followed by
Yeah.
Mr. Kumar.
Hi, Mr. Sandip. Thank you for your inputs and then suggestions, and it would be very helpful for us. And then I have one question regarding the capex. If something we are currently operating with the different third-party operator, and now we wanted to buy a capex under the new caps, and then if something I wanted to take that input, would I be able to take that input on the capital expenditure what I'm purchasing the caps?
See, so 2 answers to the question. I mean, one,
Okay.
in which category you belong to? I mean, are you into
I'm in the hotel. I'm in the
hotel business, and is
which
it
are 7,500 below category.
below, right? Yeah. So
Yes.
see, the problem statement is that if you are not a hotel which is into 18% category,
Okay.
your credit for the new capex unfortunately gets disallowed to you.
So that means I will not be able to get the input benefit of deficit.
For the new capex, no, I mean, it's difficult, and therefore, I mean, it's relevant for you to go back to the vendor and see if there is a scope for you to renegotiate the price, considering the reduced rate of GST in many products. I gave you some examples of, say, cement. The rates have gone down. We should look into the exact BOM of your expansion project and see where all you have opportunities to salvage and reduce your overall operating expense, capex expenses.
But total industry, the cement and then salvage, it will be very minuscule. We will not have
Yeah.
any benefit.
Yeah, right.
Though, yeah, if something, everything is falling under, if it is 7,500 below, and all the services related expenses we are coming and then disbursing in the product basis, it will be a huge hit to the industry, isn't it, right? Even that, then now you are not even by reducing the GST 5% cess on the cars, and then you are not allowing us to take the input, and then there is no benefit to the customer, right? In the other front, when we are procuring as a cabs, and then neither into the industry, into the dissolving the inputs, it's a huge burden on the hotels, right?
No, I agree with you. I mean, no doubt. So that's the problem statement. Previously, it was allowed while the rates were
Yes, sir.
12 and 18. The good thing was that on the whole expansion or a new project, you could have easily claimed the eligible credit, which now is
Yes.
a problem.
Yes.
Yeah.
Okay. Thank you.
Sure.
Mr. Kumar.
Hello, Mr. Sandip. It was very good sessions and I have gone through. So I have two queries over here. So my name is Kumar Patnasetti and I'm working in Signature Club Resort, and we do have the resort where we are running the room tariff 7,500 and below, and some of the cases we were charging 7,500 and above. So my query is now, when we are charging this 7,500, we are attracting 5% GST. So the query is now that input ITC restrictions. So how do we go ahead and do this? Because when we are buying the material all together, but we don't have separate billing section over there, and we don't have the bifurcation of the cost.
Right. So see, it's a simple answer. I mean, simple for me to answer, and it depends how your system is designed.
Okay.
For inputs, when we are talking about common goods, which are commonly used for a 5% tariff case and a 18% tariff case, you can go by the turnover ratio.
Okay.
I mean, that's one way of doing. Of course, the ideal situation scenario would be that, I mean, if you are able to segregate the actual consumption, knowing what is consumed for a 18% or a 5% category, your ability of defense improves, but it is easier said than done. I know it is not an easy thing to do operationally.
Seriously, correct.
The leftover option, therefore, is that you can definitely go by the turnover ratio, which when I say turnover ratio, the turnover ratio of your taxable and exempt supply. The material which you buy may not get consumed in the same month. It can get consumed in different months, say next 2-3 months or 6 months. And therefore, what we do typically in similar case is that what reversal you do on a monthly basis is provisional in nature, and end of the year you relook the whole year, recalculate what we did on a isolated monthly basis to a consolidated yearly basis, and then see if there is a true up, true down required to be done, so that on a yearly basis your ratio of taxable and exempt supply gives you the answer of how much of the inputs you can claim against the taxable supply. So that's the practical way of doing. And again, I mean, how best we are able to demonstrate the whole record keeping will be the litmus test for, these kind of, changes. Am I clear to you?
Can someone unmute him? He can't.
Thank you so much. My second query is, when we are charging this 7,500 and below, there will be the bifurcation of meal component amount, but where when we are quoting to our customer, we are directly quoting the net rate only. overall rate, but in that we are bifurcating meal component. Say example CP plan or MEP plan or AP plan. When we are charging this 6,500, again if we are charging 400 rupees as a meal component bifurcation, though that food part also will go to same percentage of tax, 5%.
Okay, it's a very good question. And see, I was talking about this some time back. Is your classification guidelines? I'll repeat for the benefit of all. Whenever there is a package where a single price is agreed with the customer.
Okay.
You and before I answer this, just keep in mind, as we speak, there are contrary ruling given by multiple advanced ruling authorities in India on these matters. So you can get a contrary answer at least on the advanced ruling part. But to answer your question, the thumb rule is if there is a single service provided, only room rental service applies. If there is a composite services provided, which means more than one services are bundled together, say 6,500 and meal for 400 rupees. The price charged to the customer is 6,900, single price. You may have a bifurcation.
Okay.
But for the customer, it is a single price.
Okay.
Then it becomes a composite supply of room rental, which is primary, and food is supplementary to that. However, when you get into an arrangement where there is a room rental 6,500, there is a food cost of 400, we have separate line items on the invoice during the the booking stage. The customer is aware that there will be separate charges. It's not bundled together. Then every service can be treated differently. That's the second way of dealing with this. Now, let me just take this example a little more complex, that your room rentals are 7,400, which is subject to 5% GST, and a 400 rupees of meal services. Now, if you bundle it together, everything becomes taxable at 18%.
Okay.
And if you split it, then you can apply the individual rates.
Okay.
These kind of services, in the past, we have seen the tax authority treating or challenging the position, stating everything what favors them. Right. So we need to be little clear when you get into the stage where booking is done, when invoicing is done, and all the communication with the customer, which model of packaging or servicing we are talking about. If there are ambiguities in your documentation during the booking stage or invoicing stage, it can lead into unnecessary complications. So, some of those things we need to be little careful, especially with the rate now having a difference of 5 and 18. 13% difference is too big a difference.
Yes.
Right.
Yeah.
Yeah, sure.
Okay. Okay. Thank you. Thank you so much.
Sure.
So, Mr. Manoj, sir?
Yeah.
There are questions in the chat box. So shall we read, or Mr. Jain will answer from looking at the questions?
Nilesh, can you help?
On it, yeah. So, Sandip, we have received a couple of questions over the chat box, and I'll start reading those questions. The first question we have received is regarding the room tariff tax slabs. So the question is, could you confirm the current GST rates applicable to accommodation services? Specifically, what are exact tariff threshold based upon the invoiced value for applying the 5% without ITC and 18% with ITC GST rates. For example, if the room tariff is 6,000 rupees and the other services like laundry bill is 1,500, food bill is 3,500, taxi bill is 2,400, and the wellness center bill is 5,000, what will be the GST to be charged? So looks like a composite services are there, and the participant want to understand the GST rate on it.
Yeah. So again, very similar question. The answer also is very similar. During the booking stage, if the room rentals were proposed as 6,000 or 6,500, and all the other services, which could be laundry, which could be food, which could be spa, which could be anything else, which which are separately chargeable on actual basis, you can take this position that every services are different and the individual rates will apply. It is not composite. But if during the booking stage a composite package was given saying that 8,000 is the package rate, and it will include one night room stay, it will include one spa free, it will include breakfast, it will include say pick and drop from the airport or railway station, whatever, and laundry or whatever, then the way it looks is that it's a composite supply of multiple services. Predominantly, it's a room rental, and sorry, there is some echo happening.
Just please retry.
Yeah, and the 18% will get triggered, and this is not something which is new. This kind of dispute on whether the service is an individual supply or a composite supply or a mixed supply, there are host of dispute already there in the public domain. Many of them have gone through the advanced ruling. Even the advanced ruling authorities have given contrary rulings. But if I have to take a view, this could be the most logical way of taking a view. I mean, depending on how you pitch the whole service, how you build it, those things becomes relevant. I mean.
The second question is related to the composite supply definition. So the question is, which supplementary services, example, complimentary breakfast, use of basic facilities, are mandatory included as a part of the composite supply of the room tariff and thus tax at the room says prevailing GST rate. So
I think
Yeah,
that
I
is
mean,
already answered.
yeah, I think so it is.
So see,
Yes, same.
primarily, I mean, and I understand why these questions are coming, because it had its share of long dispute by the authority across country in the last 8 years. I'm sure these problems are not going to get solved because we still have two rates. There is a threshold of 7,500, and some of these questions, I mean, we still need to get into the actual documentation to at least ensure that our case becomes stronger, whether it is a mixed or a composite supply or individual supply. So the question remains same, the logic remains same. It is up to us to demonstrate that what we are getting into.
Perfect. So third question is regarding the walk-in customer using the restaurant services. Participant want a clarification on the GST rate, whether it will be 5% or 18%.
Right. And so the answer, there are two ways of seeing. One, whether the hotel which has a restaurant is a specified premise or not. An individual restaurant which is not connected with any hotel cannot be considered as a specified premise. It has to therefore charge a 5% without GST credit. So that's part one. Two, if there is a hotel which has a restaurant, one has to first test whether the hotel can be called as a specified premise or not. There are certain guidelines towards that. Now, I can get into what is specified premise. I'm assuming you are aware. if the hotel having a restaurant is a specified premise, they can, for the hotels, for the restaurant services, charge 18% with credit. That's allowed. If the hotel having a restaurant is not not called as a specified premise, then the 5% rate will apply. So again, there are various answers to this, but depending on which scenario you fall, the answer will lie.
Makes sense. Completely makes sense. Okay.
Yeah.
So there are a couple of more questions, so we'll quickly move forward. So regarding the banquet and event taxation, the participant want to ask the applicability of the GST rate for the comprehensive banquet events, which includes charges of the hall rental, catering, and the associated services.
Right, there's no change. I mean, so it remained 18% earlier with ITC with input tax credit.
Okay.
The answer remains same.
Remain the
It
same.
continues to be taxable 18% with credit. So I mean,
Okay.
with this GST 2.0, there is no change on this business.
Perfect. So the next question is regarding the GST on the soft drinks. So what is the specific GST rate to be collected for packed soft drinks, carbonated and non-carbonated, sold from the restaurant, minibar or room services? Is it 18% or 14%?
Okay. So see, before I answer that, let me give you a background. We have seen cases where carbonated beverages, smokes. Now, when you render these kind of products in a hotel, whether it is to be treated as a service or whether it is to be treated as a goods, is already a matter of dispute. Especially when the hotels were taxable at a 5% category or a 12% category, tax authorities have taken a view that supply of beverages or smokes should be taxed at the respective rates of 28 plus % or the GST rate applicable to them. Right. So there are two parts. One, whether it is to be treated as a service. If the answer is yes, that it's a composite supply of, say, banquet services or a room rental where some of these smokes or beverages are part of the package, complementing or complementary to the whole thing. It may so happen that everything is subject to 18% category. And therefore it depends how do we design the package. But in isolation, if we talk about a plain vanilla sale of goods for carbonated beverages, today the rate is 40% GST. It was 28% GST plus a 12% cess. So while the total GST was 40% even earlier, the current GST is also 40%. However, there is no cess. It's the basic GST rate, which is 40% taxable in isolation. So we need to see this answer in the context of whether it is a supply of goods or service. If goods, then the rate which I spoke at the last will apply.
Makes sense. Regarding the next question goes around the wellness center and the massages. So what is the correct GST rate for the services provided by our wellness center, spa, massage therapy, especially considering the recent potential rate reduction for physical wellness center services?
Right. So see, you're right. And there is a change of rate 5% which has come in on the wellness center, salons, spas, barber shops, yoga centers, wellness centers, gyms, fitness centers, any beauty treatment in the nature of manicure, pedicure, all these now after 22nd becomes taxable at 5% GST. And of course, with a rider that you cannot claim the GST credit. And the answer doesn't change whether the services are provided from a specified premise or a normal premise. So the answer remains same for any type of premises from where the services are provided. The rate is 5%. without credit.
Correct. Next question is regarding the taxation for laundry service. So what is the applicable GST rate for guest laundry and dry cleaning services?
Yeah, so in isolation, it is 18% with credit. If it is an individual service unconnected with the room rentals, if it is a composite supply of room rentals, which includes laundry services also, you can take a view depending on whether the composite value is more than or less than 7,500, the applicable rate will apply.
Got it. The last question from the same participant is GST for taxi service. If the hotel provides an in-house or outsourced, especially separately built taxi transport service to guests, what is the required GST rate?
Right. So again, see, there are two parts. If the bill is inclusive of, so let me answer this. The assumption is that the bill will be for the whole taxi service, including fuel cost. It's 5% without ITC, and it is 18% with input tax credit. So previously it was 12% with ITC. The only change is 12 has become 18. The eligibility of credit criteria remains what it was earlier. So there is, to that extent, there is no change. Again, not complicating whether it is with or without fuel, because that dimension again gets complicated.
Makes sense. So we have a couple of questions, two more questions. So the next one is from the other participant for a credit note against an invoice dated 28th of September being issued today. Which tax rate should be applied, the old rate or the new one?
Old rate.
Okay.
So it's a reversal of the original transaction when you give a credit note. And therefore, the credit note, if it was subject to a 12% GST, assuming for a room rental, then the current credit note will be at a 12% rate, which effectively means that I am reversing the original 12% transaction. And therefore, when I paid to the government 12%, and assuming the customer has claimed credit of 12%, another rate cannot apply. When a credit note is given, because there is a reversal of the original transaction. The accounting treatment also works in the same way.
Makes sense. Yeah. So we got one more question. So what are the changes in how ITC can be claimed for hotel operations, example, supplies, utilities, etc.? I think so, no change, but yeah.
Yeah, I answered this. So
yes,
so it's a combination of your taxability which decides the ITC, not in isolation. So whether you fall in the taxable bracket or exempt bracket, and how do you identify, correlate the utilities towards a taxable supply? That's the litmus test of us passing through the input GST credit test. It's new. It has not been there for the last 8 years for this sector, and therefore it requires definitely a preparedness to ensure that we don't get into complicated stuff.
Okay. Participant, there is one more question. So from another participant. So can we know whether 5% GST can be charged for both room and breakfast in case the room rate is less than 7,500 as bundle service? Still is not very clear. How should one portray the bill or booking confirmation?
It's both, right? When you go for booking, the customer should be clear of what he's opting for. And the same thing should be there on the invoice. If he's opting for a bundled service, during booking, the invoice should look like a bundle. If he's opting for a split service, the invoice should look like a split. The moment there is a deviation, it creates complications.
Makes sense. Yeah. So looks like we are done with the questions, and over to you, Manoj.
Right. So I think thank you everyone for the wonderful questions. I hope I could answer to your satisfaction. And if there is anything which you believe there is a need to bounce back, do reach out to us. We are more than happy to help you guys. Thank you, everyone.
Thank you.
Yeah.
Thank you, everybody. Yeah.
Okay. Thank you and have a good day.
All right, Mr. Jain, we just have, of course, a very formal vote of thanks for all of you, taking forward from Manoj. And firstly, definitely a very, very big thank you. Very, very good evening to all the ladies and gentlemen who are here present. On behalf of the Bangalore Chamber of Industry and Commerce, the Hospitality, Tourism and Wellness Expert Committee and the BCIC Secretariat, it gives us great pleasure to express our heartfelt gratitude to Mr. Santhosh Dalvi, CA Mr. Sandip Jain, and also CA Mr. Ninesh Linali from KPMG in India for taking the time out to share such a rich and insightful session with all of us this evening. Thank you very much, especially Mr. Jain, for giving us a very, very good perspective on the entire content. Your presentation today was extremely exceptional. It was truly very heartening to understand about the different concept and the changes which has been made with the new GST reforms. Very clear, detailed, and deeply relevant. You helped us understand the recent GST rate rationalization, not just as a policy change, but as a major shift that will be shaping how the hospitality and tourism sectors operate in the coming years. The way you explain the two-tier rate structure, the impact on the room tariffs, restaurants, and the wellness services, and the transitional challenges after September 22 made the entire discussion very accessible and definitely meaningful. Thank you again for that. Your guidance on the ITC reversals, intermediary services, and even the Karnataka tourism policy 2024-29 gave us a complete picture connecting national reform with state level opportunity. What stood apart was how practical and solution oriented your insights were. You didn't just interpret the law, you helped us understand how to adapt it, plan for it, and definitely make the most of it. On behalf of our chairman, Mr. Manoj Mathew, and all of us at BCIC, we sincerely thank you, Mr. Dalvi and Mr. Nilani, for your time, your clarity, and your generosity in sharing your expertise. You've helped every one of us walk away today better informed, better engaged, prepared, and certainly more confident about the road ahead. A big thank you as well to our entire BCIC Secretariat, especially Mr. Sham, for coordinating this with our committee members and everyone who has joined us here today for making this very engaging and valuable evening. We were very certain that the questions would not be ending, but then definitely thank you so much for such an engaging session with all of us. And with your permission, I may request maybe to our members, in case if you have any further questions, that can be put forward to you. I'm hopeful that it will be very, very helpful to the rest of us. And once again, a very, very big thank you to all of you on behalf of the BCIC committee and especially the hospitality aegis from all of us. Thank you very much and have a very great evening.
Thank you.
Thank you.
Thank you, everybody. Thank you so much for your time. Thank you, Sandip.
Thank you.
Thank you all.
Thank you.
Thank you.
Thank you. Thank you, Mr. Kalyan and Mr.